Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. I'm very excited to be here with you this morning as we are going to be taking another fresh new look at the financial market today as we gear up for the most important event for this week. Remember, we are looking forward to the FOMC meeting, which definitely is going to be giving market participants an insight into the Federal Reserve plans as regards to their interest rate cut for the year 2024, which of course is going to be helping in making decisive decision as regards the US dollar asset. Before I begin, I want to let you guys know that I'm having a sore throat, and I just hope my voice comes out quite all right. I'm trying to stress my voice to make sure that I'm being heard. But if you can hear me, let me know in the comment section. I will just tune up the sound a little bit so that you can hear me very clearly. So with that being said, I welcome you once again to yet another promising edition of the Forex Morning Mastery. My own name is Sheriff Daramola, and for the next 30 minutes thereabout, we will be delving into the financial landscape, looking at things from a technical standpoint, and of course having a little bit of insight into the fundamental factors behind the scenes, with the utmost intent of strategically position ourselves for the next move today. And so far this week, we since the week began yesterday, we have been monitoring three financial assets which we did include into our watch list, and they include the USOILSPOT, the USDJPY, and of course the XAUUSD. And in the last 24 hours, we have quite an interesting position across board, as all the assets we capitalized on, all the positions we capitalized on, are actually in profit. So we're actually starting the week on the positive side, but I want to emphasize that we shouldn't get carried away with this latest development, because for me, if you would ask me, I will tell you that this profit we are gathering so far is really not profit at the moment. I'm not seeing it as profit right now, as we could still see some volatility happen during the course of the week as a result of the major event we are looking forward to. And as a result of that, we could see some choppy situations goes on in the market, which could of course erode into the profit we just made at the beginning of the week. So we shouldn't get too excited. Let's keep our cool, and let's see how we will be strategically position ourselves for the next move. With that being said, here we will be before I go into the details, I know that we will definitely have some newcomers in the house who will be wondering what this is all about and would like to have an insight into what we actually do here. Now, to simply put, I usually share a couple of videos during the course of the weekend, which of course gives a detail into what I think will happen on this asset during the course of the new week that we started yesterday. And as a result of doing a follow-up detail on this asset, the Forex Morning Mastery session was born. So we usually come together here on a daily basis as a community to do follow-ups and reviews on these assets in preparation of both the London and the New York session. And this session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and I encourage you all to stay tuned in so you don't miss out on the insights that we will be sharing during the course of the session. And it's also important for you to note that my aim here in this community is to equip you with the knowledge and skills necessary to be able to make your own independent trading decisions. Now, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to utilize the information you gather in this community to enhance your own trading decisions and strategies. So once again, to my newcomers, welcome on board, and I encourage you to actively engage in the comment section. So with that being said, here I see a couple of comments in the comment section. Raja BD and Philip, how are you guys doing this morning? I'm very excited to have you around with us this morning. So with that being said here, I just saw your compliments there, Philip. Okay, good morning to you, Baba. All right, so with that being said here, let's dive. Okay, Ben Asamani, good morning to you too. Glad to have you around with us this morning. So with that being said here, we will be going right into the business, and as usual, the first thing we normally do in this community is for us to keep tabs with the fundamental factors that will be driving the market sentiments today. And of course, you know how we do it in this community, especially for those of you who have been with me for a while now. You know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and in fact better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we've been monitoring since the beginning of this week, which I mentioned earlier, we will be focusing on economic features from both the United States and the Japanese economic docket. Now, for this week, we do not have any high impactful event from the Japanese economy, though we have some mid-tier events which also happened yesterday. Remember, yesterday we did talk about the anticipation of the unemployment rate from the Japanese economy, and of course it came in beyond expectation, giving us a positive insight into the healthy situation of the labor sector of the Japanese economy. Now remember, we talked about the consensus, which was 2.5%, just as the previous month, and in fact the data came in at 2.4%. And of course, when we are looking at unemployment rate, when the data is lower than the previous data or even lower than the expected figure, it's a positive signal. And if the data is higher, then definitely there is a contraction in that sector. But from what we have here, 2.4%, it's a little bit lower, which of course has given some positive traction in favor of the Japanese yen. If you took advantage of the sell position we had yesterday, we saw how this, and during the early hours of today, we begin to notice some bearish traction resume again in that market. So we shall look into that market and see how we will position ourselves for the next move. Now, for today, Tuesday, January 30th, we do not have any impactful event today at all. But what I did here was to include the mid-tier economic features from both economies, so that we can at least have an idea into what majority in the market will be looking forward to. So I will be touching the major one I think are very important amongst the ones we have here. Now, the first one on the list is the housing price index, which is coming in from the United States economic docket, and this is an index released by the Federal Housing Finance Agency, providing an estimate value of housing market condition. And we all know how the housing sector is considered to be an important indicator it's a very sensitive sector, which of course tells us how well the US economy is. And of course, a high reading is considered to be a positive signal, which could probably dovetail into a traction in favor of the US dollar, while a low reading could be considered as negative. Now, looking at the previous data here for the month of October, it came in at 0.3% expansion, so it's a little bit growth there, but we do not have any consensus to compare with. But usually where we do not have consensus, it usually comes in maybe an hour or two before the event happens. So we shall continue to watch and see what economists are thinking, and let's compare with the actual data to see if it's better or not. Then another event I would like us to look forward to today is coming up in about 6 to 7 hours from now. That's the JOLTS job openings. So the US JOLTS data will be watched closely by investors, as we all know, especially ahead of the Fed policy announcement coming up later today. And this survey is done by the US Bureau of Labor Statistics and helps us to measure job vacancies. It collects data from employers, including retailers, manufacturers, and different offices each month to give us an insight into this. So we shall also look forward to what job openings are. The higher the job openings, the better the economy as well. And we have a consensus of 8.75 million compared to the previous month of 8.79 million. So we shall look forward to see what the actual data will be on that one. Then on again, simultaneously, we will be seeing the release of the Consumer Confidence Index, which is of course released on a monthly basis, and it gauges the sentiment among consumers in the United States, reflecting prevailing business conditions and likely development for the month ahead. Now, this data shows us a picture of whether or not consumers are willing to spend into consumer spending, and of course this is a major driver of the US economy. Now, if we from the look of things, if the figure is high, it's a good signal for the United States economy, and if the figure is low, it's not a good signal. So we do not have any data here. I don't know why that is. Well, that is quite strange anyways, but we shall look forward to see what the data will be on that one. Then moving forward into the Japanese economic docket, we are looking forward to the retail trade, which is which captures the aggregate sales made through business locations, in which the principal activity is the sale of merchandise and related service to the general public. A high reading is considered as positive for the Japanese yen, while a low reading is considered as negative. Now, if we look at the previous data for the month of November, it came in at 5.3% expansion, and based on what is on ground right now, economists are projecting 4.7%, so which is a little bit lower than the previous data. So we look forward to see what the actual data will be, but from what economists are projecting here, it's a sign that there is likely going to be a contraction in that particular sector. So we shall look forward to see what the actual data will be. But most importantly, as technical traders, we understand that the anticipation of this event usually affects the sentiment in the market, which of course will reflect on the chart as price action. So our duty here this morning is to go through the chart, looking at things from a technical standpoint, and let's see if we can identify patterns and structures that can help us to strategically position ourselves for the next move. So with that being said, let's dive right into the business. So I had to open up this chart down because I know it usually takes a while before my USOILSPOT chart loads up, and we have it right here. So the first asset we will be looking at this morning is going to be the USOILSPOT. Now, USOILSPOT has done very well for us since the beginning of the week, as at the moment we have a minimum of 3 positions running right now, where 2 of them is running with significant amount of profit. The first one is running with about 128 pips in profit, and the second one is currently running with about 70 pips in profit, giving us a total of 190 pips thereabout, while the third position just got triggered about 30 minutes ago, giving us approximately 200 pips in profit on this particular asset. And I do hope you all capitalize on these opportunities, as I did give regular updates during the course of yesterday's trading session. Now, for the sake of those who are joining us for the first time, let's quickly run through what really happened at the beginning of the week on the 1 hour time frame, and what led to the decision that we will be selling the USOILSPOT. Now, before I go into the details, I want to emphasize that we will not be going into the higher time frame. For those who have been with me for a while, you know this. We only be talking about we only be analyzing the 1 hour time frame, which of course is our execution time frame. But if you in any way missed out on the top-down analysis we did on this asset, you can check the link right in the description box below, so you can have a background knowledge and understanding into how we got to this point we are on the chart. So we have our key level for this week at the $78 area, as you will see right here. And you know how we use our key levels in this community. As long as price remains below the key level, we definitely want to be looking out for patterns and structures that support the idea of selling. Now, the week started with a consolidation phase. Remember, we saw price action initially confined within that range between the $78.50 level and the $78 area to emphasize the prevailing uncertainty in this particular market during the first 12 to 14 hours of the week. And whenever we identify such a range like this, you know how we do it. We exercise patience and wait for either price breaking out of the resistance line for buying opportunity, which of course never happened. I'll wait for price to break down the support line to give us an opportunity to sell. Now the later was what happened here. We saw price break down the support line here. I think it happened during our live session yesterday, and in fact the market even came back to retest the structure. So if you had missed out on that opportunity, the market in fact came back to retest the structure, and since that moment we have been selling this particular asset. And remember that we did highlighted couple of levels which we identified on the chart, which we decided we will be adding more sell positions to. So we had the $77.40 area, which we had a sell stop order below that structure. And recently this morning I shared an update on both my TradingView and Telegram platform that we will be adding another sell position right below the $78.73 level, which has already been triggered at this point in time. And for those of you who did capitalize on all of these opportunities, well done, and kudos to you for being on standby to capitalize on these moves. Now, with the way things are going right now, since price has moved significantly well, we are running with approximately 200 pips in profit at this juncture. It is pertinent that we secure our current sell position while we be on standby to capitalize on more opportunities in this market. And if you would ask me, and while trying to give enough breathing space for price action to move around, I'm of the opinion that anywhere around the $77.20 level seems most appropriate to move all stop losses to. Please ensure you secure your position depending on where your entry point is. Move your stop losses within this range, and remember that we always want to give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is to be our next line of action? And in fact, to make a well-informed decision, we need to also understand the driving factors behind the scene that is causing price to drop significantly. Now, for those of you who are aware with the higher time frame, the structure in the higher time frame, we know that price is in a long-term perspective has a bullish outlook, and that this bearish momentum we are seeing here may be as a result of some profit-taking activities due to the uncertainty surrounding this market, which is coming with a lot of factors. We have various factors behind the scenes, one of which is the geopolitical tensions in the Middle East, which are intensifying and continue raising concerns about oil supplies, providing crucial support for oil prices. Now, in as much as we are selling this asset, we need to be very, very careful, as the recent development so far is there is an heightened tension in the Middle East right now. We heard about the attack on the US military base in Syria. That was on Sunday, killing I think 3 or 2 US personnel, and of course we have several injuries as well. And from the report we had yesterday, the United States President Joe Biden emphasized that the US is going to retaliate, attack back, but we don't know when that will happen. And in fact, the possibilities of attacking Iran itself is also on the table. And if an attack on Iran happens, Iran is a major key player in the global oil market, producing about between 1.2 million to about 1.8 million barrels every day. And if this happens, you definitely know that this will affect or disrupt oil supply. And when there is a disruption in oil supply, what happens? Demand increases, and when demand increases, what happens? Price soars. So in as much as we are holding a bearish bias at this point in time, we need to be very, very careful. Ensure you move your stop losses, secure the current positions while we wait and see how far this will go before the next wave of bullish momentum will happen. Then another thing that could also drive the market sentiments today is the American Petroleum Institute, API, who are set to release the US stockpile data today, for last week today. And this, of course, is going to potentially affect the prices of oil. So we want to know if they were able to have a high stockpile for last week or reduced. And if it's high, then it shows that there is more supply in the market and price will likely drop further to the downside. And if there is a low stockpile, then definitely there is an increased demand, then price is likely going to climb further to the upside. So well done, guys, on holding on to the sell positions. We continue to maintain the bearish bias at this point. Now, from the structural and technical perspective, I want to show you something here that we did emphasize on the higher time frame yesterday, and that is this beautiful ascending trend line we had here, which had played a major role in guiding the direction of price action since the beginning of this month. And as you will see from yesterday's trading session, we saw how price broke down the ascending trend line, as you will see here, came back to retest it, and it appears it wants to continue to the downside. So in as much as we hold it onto this bearish bias, we should also take note that this area we are in right now, that is this territory we are in right now, is more of the bias territory. Look at what has been going on in this market since last week Friday. Look at this area as being a strong demand zone. As we saw since last week Friday, our sellers have been finding it difficult to break through that particular area, giving us an insight into how strong the buyers are around this point. So we need to be very, very careful. Ensure you move your stop losses, secure these positions, as anything could happen. Buying pressure could come in at any point in time to take us out of the sell position. And if it does, how do we intend to buy this asset? How do we intend to buy if sellers now lose the momentum? Well, looking at the structure and considering the ascending trend line, it's important that we allow price to climb back above the ascending trend line before we can start considering buying this asset. Now, looking at the structure here, you will see the ascending trend line shares a beautiful confluence with a $77.40 area, which was our second sell position for the week. And in fact, if price can break back above the structure, especially following the continued buy pressure noticed during the Asian session around the $76.75, $76.70 area, I'm of the opinion that continued buy pressure above the structure will be good opportunities to join an uptrend move. And if price continues to climb new highs, breaking out of the $78.50 level, we will be looking out for more opportunities to buy. Now, remember that on the higher time frame, the $78 level is the neckline of the double bottom structure we identified. And of course, if price can stay above the key level here, it makes quite a lot of sense to hold on to a bullish bias today. So let's see how the market will play out. I think in the next couple of hours we should begin to see some traction in whatever direction where price will be going. And in fact, if price can continue to stay below the $76.73 level, further fortifying the strength of the sellers, we will be looking for more opportunity to sell. And of course, I will be updating you all in the comment section of both my TradingView and Telegram platform. So this is my simple view on the USOILSPOT. I encourage us all to mark out these levels on our chart. Very, very important, as we will be needing them to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right, so I see your comment, Philip. Thank you for the familiarity there. Thank you very much. Jonah Aruna, good morning to you. Rex Vagara, good morning to you too. Thank you for checking in. All right, so in the absence of no questions, well, I want to assume that we are all on the same page here, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and we've also had a good start to the week as price since the week began had continued to find lower lows and lower highs, giving us about 3 sell positions running at this point, where 2 of them are actually doing very well, and the third one is currently in a loss at this point in time. And it's, well, we never can tell yet. Let's allow this candle to close before deciding if truly this is the beginning of another wave of bullish momentum, or this could be probably just a way to shake out a lot of sellers before the downtrend continuation happens. So currently we have about 3 sell positions collectively yielding over approximately 100 pips, let me put it that way, has the Japanese yen witnessed buying, attracted buying activities throughout the first day of the week. And one of the things I think is affecting the ascent of the Japanese yen has to do with, first of all, if we look at the technical structure on the US dollar index, more or less in the last 2 weeks, price action has been range bound, which further emphasized the level of indecision in the market. And we all know, while the indecision is prevailing at this point in time, as we all know that market participants are stepping aside waiting for clues into the timeline of the Federal Reserve's interest rate cut for the year 2024. And one of the things that has caused this indecision in the market is, if you remember last year, the FOMC said they made it clear that they will start interest rate cuts due to the easing of the inflationary pressure in the United States. However, data coming in from the United States in the last couple of weeks was quite strong, further emphasizing the resilience of the US economy. And of course, the inflationary data that came into as well still shows that inflation is still sticky in the United States. And as a result of this had thrown a clog in the wheel of the expectation that interest rate cuts will come in as early as the month of March. And right now, a majority have pushed the odds now is favoring interest rate cuts in the month of May, but we are not yet sure yet. Now, this week is laced with our impactful event from the United States, one of which is the Fed interest rate decision, which is coming up tomorrow. We also have the FOMC monetary policy report coming up tomorrow. And of course, we also have the Fed chairman, Jeremy Powell, having a speech tomorrow. And of course, market participants will be scrutinizing this report to know and have an insight into how the Feds are planning to ease how to ease their monetary policy for the year 2024. Now, this will make a decision for us tomorrow. So prior to this event, there is likely going to be continued consolidation in the market, continued choppy scenarios in the market. So we shouldn't get surprised if the market continues to go within a range till tomorrow. Now, with the information we have gathered, now there are other factors too as well. The geopolitical tensions in the Middle East as well is inciting a market participant moving their funds into safe haven assets such as the Japanese yen. And then we also have the declining US Treasury bond yields too as well, which of course is also affecting the dollar. We all know how the US Treasury bond yield is directly proportional to the United States dollar. When the Treasury bond yield drops, the dollar will drop, and when it rises, the dollar too will follow suit. Now, currently the US Treasury bond yield is dipping at this point in time, which of course is also affecting the dollar too. So basically, everyone will look forward to the FOMC monetary policy meeting, which is coming. It's a 2-day meeting. It's starting today and it will end tomorrow, and tomorrow will be the announcement. So everyone is looking forward to what that will tell us. So in that regard, we shall rely on our technical skills to position ourselves for any potential move at this point in time. Now, if you look at the structure and consider the series of lower highs, for those of us who had sold and are in profit right now, well done to you for being on standby to capitalize on this move. And in fact, I will encourage you all to move your stop losses right now. All stop losses on all positions should be around the second entry, and give enough breathing space, of course, to allow price action to move around in anticipation of maybe price will continue to the downside. Now, with a well-secured position, it is quite clear that since the beginning of the week, price action has transitioned into a series of lower highs, which further emphasize the strength of the sellers in this market. Now, when we have series of lower highs, it's our duty to mark out this level, connect the series of this level to give us a descending trend line to work with. And I think I'm going to be having a couple of descending trend line here due to the wicks of this candle. So let me just okay, I think let me duplicate this and see if it works. I'm not sure why this is okay. So we have a couple of trend lines here, where the thick one is the major trend line, and of course you know how we use our trend lines in this community. As long as price remains below the descending trend line, we shall continue to look out for patterns and structures that support the idea of selling. And in fact, as a result of this, it makes a lot of sense to place a sell stop order below the 147.300, as this move here could be a retracement of that bearish momentum that may still continue to the downside. Now, we want to see how this candle is going to close. This candle still has about 16 minutes to close, so we want to see this candle close so that we can make a decision going forward. So now the possibilities we have here is, one, price may come back into the 147.700 area where we had our second entry, which interestingly shares a confluence with that descending trend line. And if we begin to see selling pressure around that area, giving us signs that buyers are finding it difficult to break out of that descending trend line, it will be a good opportunity to join a downtrend continuation if we can see a reversal pattern there. So we'll just mark out the neckline of the reversal pattern and sell the breakdown of the neckline, and then have a sell stop order again below the 147.300 to maximize the potential of the bearish move. However, if price action breaks out of that descending trend line, then this will be the first time price will be breaking out of the structure this week, giving us an idea that price may likely continue to the upside. Now, it is important that we stay very careful here. We are not having a buy stop order above that trend line yet, as we will need some confirmations before we jump into that buy position, because a breakout of this descending trend line will still turn out to be a false breakout. So we'll need some confirmations to happen before we join it, and what we are going to be looking out for is a potential retest of structure. It could be the retest of the 147.700, hold any of this descending trend line where the appearance of buy pressure resume around that area will give us a privilege to join an uptrend continuation. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. Now please note that we still maintain a bearish bias on this asset, and you can see how important this descending trend line is on this current market structure, as it's going to be guiding our trading decisions for today. So I encourage you to mark out these trend lines on your chart, as you will be needing them to guide your independent trading decisions today. So depending on how price reacts to this trend line will determine what our next line of action will be. So this is my simple view on the USDJPY for today. So I encourage you to mark out this level, and let's see how far this is going to go. Will it continue further to the downside, or will it break out that descending trend line? The market will surely tell us. If you have any questions, feel free to let me know in the comment section, and please click on the like button, give the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial, and of course help in facilitating the growth of this community. So thank you very much, guys, and for those of you who had already clicked on the like button, thank you very much. I really appreciate that. And for those of you who are yet to like, come on, that's the cheapest way you can support this channel, and thank you very much as you do so. So I look forward to your questions, if you have any, in the comment section while we prepare for the next asset on our watch list. Hello guys, we have 10 viewers on board and we only have 4 likes. What's happening, guys? Please click on the like button and support the channel, please. Thank you very much, guys. Okay, so moving on, the next assets we will be taking on. So the last asset on our watch list for today is my favorite asset, of course. That is the XAUUSD, popularly known as the gold spot, and we've had quite a profitable start to the week right now, and running with about 3 buy positions, running with a total of, let's check how many pips. The first buy position came in here 2024, that's 142 pips. We also have about 100 pips, that's 240, and the third position just got triggered a couple of hours ago, giving us 35 pips in profit. So we have roughly about 160-70 pips in profit from 3 buy positions. And for those of you who did capitalize on this opportunity, well done, and kudos to you for being on standby to join this move. Now let's run through what really happened yesterday and what we did talk about during the course of the session, and what led to the decision of buying this particular asset. Now, let me reiterate here again for those of you who had not watched my weekend videos on the XAUUSD. Please go ahead and watch that video after the session, as you will have a background knowledge of how we got to this point we are here, and of course it will make a lot of sense what we are talking about here if you have this background knowledge. Now, during our live session yesterday, one of the things we observed on the 1 hour time frame is the descending trend line that we projected on the higher time frame. As you will see here, this descending trend line has been holding bearish pressure since the beginning of this year, as this year was characterized with a lot of profit taking activities, as we did talk about at the beginning of the week. Now, prior to our live session, we had a breakout of the structure, which gave us a sign that we might be seeing a strong bullish momentum for this week. Now, in addition to the breakout of that descending trend line, we saw how price action for the first 1, 2, 3, 4, 5, 6, 7, 8 hours of the week, price was confined within the $2028.50 level and the $2019.20 area to emphasize the prevailing indecision in the market at that point in time. And you know how we do it in this community. Whenever we have a range identified like this, we exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And of course, prior to our live session yesterday, we had a buy position triggered at the $2028.50 level. Price moves reasonable well for some time, even breaking out of the 2035 area. Moved our stop losses accordingly. I did give an update as regards to this position yesterday after having 2 position triggered, and all of a sudden we saw this huge engulfing candle bringing price crashing back into that asset descending trend line. And I quickly gave an update when I saw this. We were taken out of all the buy position. The first one here went into a loss, while the second one closed with a small amount of profit, or a worst case scenario break even. So I did an update after considering the fact that technically, when price breaks out of a key trend line like this, we expect at some point price may still come back to retest it in anticipation of another wave of bullish momentum. Now, with the situation here, we said that if price gets into the 2024, for those of you who were with me on my XAUUSD live window yesterday during the New York session, you will be aware with this. And of course, I did update it on both my TradingView and Telegram platform that we will be looking out for buying opportunities around this area, and only sell, because I got a lot of messages as people were thinking that price will go to the downside because of this engulfing bearish candle. And I did mention in my commentary that we are only selling at the breakdown of the $2019.20 level, which of course never happened. So we had a buy position triggered at the 2024, and of course all our multiple levels still holds. So we kept on adding more position by placing our buy stop orders above the 2028, and of course finally this morning another 2035 level got triggered too as well. And once again, congratulations to everyone who did capitalize on this buying opportunity. So at this point, we are running with about close to 200 pips from the 3 buy position at this juncture. So I would encourage us all to move our stop losses right now, secure the current position, as we may see some volatility in the market as everyone looks forward to the mid-tier economic features from the United States. And if you would ask me, where is it appropriate for us to move our stop losses to? Well, anywhere below the third entry here at the 2035 makes quite a lot of sense. Please ensure you have enough breathing space here, allowing this giving enough room for price action to move around. Now, with the situation we have here right now, and with a well secured position, what is going to be our plans for today? And in fact, why is the gold rising or finding new highs at this point in time, especially when everyone is looking forward to the FOMC report from tomorrow to make a decisive decision? Well, one of the factors here is the US Treasury bond yield, of course, which has significantly bolstered the price of gold. And I usually emphasize how the US Treasury bond yield is directly proportional to the US dollar. If it drops, the dollar will drop too as well. And the US Treasury bond is not doing very well at the moment, and this is as a result of the heightened risk of a broader regional crisis dampening the recent market optimism. And as a result of this geopolitical tension and the potential we heard about the US President Joe Biden yesterday talking about retaliating the attack on their base in Syria, killing 2 of the US personnel and of course injuring about 17 personnel on site. Now the attack, now we don't know when it's going to happen. Of course, we don't know when it's going to happen, and there are some parlance thinking that there's likely going to be an attack in Iran itself, and this is causing uncertainty in the market, and it makes quite a lot of sense that market participants will move their funds into safe haven assets such as the gold. Now, with the way things are going, the gold has a tendency of skyrocketing, using that opportunity to push further to the upside, and in that regard I still maintain a bullish bias on this particular asset. Now, with the information we have gathered here and looking at things from a technical standpoint, how do we intend to continue this move? Now, first of all, for those of us who missed out on this breakout of the 2035 level, there are still chances that price could come back and retest that structure to push price to the upside. So let's hope that price may still come back into structure where the appearance of buy pressure could give more opportunities to join an uptrend move. And also we have this ascending trend line in place. Look at this ascending trend line right here. Let me do some readjustment to this ascending trend line due to the current structure right now. Okay, so let's bring back our candle chart. So you know how we use our ascending trend line. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying. And look at what happened around the $2,036 area yesterday. As soon as price got into that $2,037.50 level, we saw selling pressure resume, pushing price to the downside, and in the last couple of hours now, price is right within that area. So we don't know if the sell pressure will resume again. If it does, it doesn't mean that the momentum has shifted. It could be some profit taking activities. As long as price still remains above this ascending trend line, we still maintain a bullish bias. It could drop into the ascending trend line, and if we can see a reversal pattern here, we buy the breakout of the neckline of that pattern. However, if price continues to climb new highs, breaking out of the recent high, so we have a new high right now at the 2040. So you want to be marking out these levels on your chart right now. So we have the 2040 level, which is the highest point price action has been for this week. So I would like to give this a green color, and then we label it $2040 level. So I will be having the buy stop order above that structure again to continue the uptrend. If price breaks out of that structure, we will be adding more positions to our existing trade. Now, there are 2 ways to which we can maximize the potential of this move. Please listen attentively. Now, if you have been part of this profitable journey so far this week, you can afford to leverage on some of the profit you had made so far by placing a buy stop order above the 2040. Now, if it doesn't work, there is no problem. We only risking some of the profits we had made. However, if you are new with us and this is your first time taking a position on the XAUUSD, that means you don't have any leverage for this week. So what you will be doing is to exercise patience and wait and see if the market will break out and retest the structure. Then you want to be joining an uptrend move. So that is how we are going to be capitalizing on that. Now, so we maintain a bullish bias here. Let's see how far this momentum will go. And even if price action breaks down this ascending trend, I know some people will be asking if price breaks down this ascending trend line. If a retest of structure happens, we could consider selling. But if we sell, we should note that we still have this descending trend line from the daily time frame still intact. So price may still come back to retest the structure with the intention of continuing the uptrend move. So it's still looking bullish, even if sellers come in at any point in time. So, but I will be giving you updates on both my TradingView and Telegram platform as we continue to monitor price action. And that reminds me, I dropped the link to the XAUUSD live window right in the comment section, and it is pinned at the top of the comment section. So you want to be clicking on that link, click on the notify me button so you can get notified as soon as we come online. And for those of you who do not know, the XAUUSD live window is a platform born out of popular demand from members of this community, where we all come together on a daily basis, especially during the New York session, to monitor real-time price action on the XAUUSD. So this is an opportunity for you to be on the same page with us as we make decisions real time, where we place our buy stop orders and how we also manage the trade as we continue to monitor the price action. So with that being said here, I think we are good to go today. I think we are on a very positive side of our portfolio and happy to take on more risk, because when we are profitable, we are willing to take on more risk because we have something, we have a cushion, we have a leverage to place our buy stop and sell stop orders wherever they are suited to be. So let's see if you have any question. I do hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 5 to 10 seconds off to see if there are any questions before we go ahead and round off on today's Forex Morning Mastery session. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And thank you very much as you do so. All right, I saw your comment, Torres Master and Jonah Aruna. Thank you very much, guys, for your support. And I think we got some more likes on this one. Right now the likes are standing at 7, though we have about 12 viewers on board. We still have a variance of -4. Please click on the like button, guys, if you have found this content helpful and useful in making your own independent trading decisions. And thank you very much as you do so. And Torres Master, what do you mean by this week is freaky? I hope I'm not sure I understand what you mean by that. Please clarify that, please. Okay, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we shall be rounding up on today's Forex Morning Mastery session. It has been a wonderful moment with you guys today, and in fact this week has started on a strong and positive note for us all across all the assets on our watch list, as we are currently holding significant profits across board. Last week was a challenging week for us, so I hope that this week we will be able to recoup the losses we incurred on I think the USDJPY and the XAUUSD. So let's see how the market will play out, and trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So today we were able to look at the USDJPY, the USOILSPOT, the XAUUSD, all of which we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. And I do hope you marked out these levels accordingly on your chart. If you did, well done to you. So what we want to be doing right now is to exercise patience and allow structures to mature before jumping into any positions today. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, you want to have a well-defined risk management strategy in place, ensuring that you mitigate your portfolio against any sudden pullback that may happen if price goes against us. And for those of you who are joining us for the first time today, I hope you are able to gain one or two things from what we discussed. If you did, you want to be part of our subsequent editions. The more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time prepare for tomorrow's session, which promises to be an insightful and exciting one, as everyone look forward to the FOMC report and federal interest rate decision from the United States. So on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.